and interface and UX and all of that. We're live, Joe.
Hey, hey, hey.
How are you, buddy?
Good, man. Good.
Good.
Just gearing up for I believe another weekend coming.
Yeah,
Oh
we're on a
shit!
Friday.
Did you just see that like flash crash just a second ago with BTC? It was down to like 2,500, man.
You really think I'm that fucking stupid? Really, really.
Oh,
Although Vitalik Buterin got me.
he did get you, yeah.
He got me. He got me. So Vitalik tweeted this article he wrote, and I was in a. I got up. I went to bed early last night for the first time in 2 years, and got up at 5, and I'm trying to shift my schedule. And so I was up at like I was sitting in front of the computer at like 5:20. And I say, "Oh, Vitalik's got a new tweet. What's he got?" And it's this article in defense of Bitcoin maximalism. And I'm like, well, he started off in Bitcoin, and he, has a background in it. He wrote a Bitcoin magazine for a couple of years, and so, yeah, and he wanted to launch Ethereum as a Bitcoin product. And so I was like, okay, well, in defense of Bitcoin maximalism, I'm reading this article, and I'm like, what the fuck is this cheesy shit? And I keep going back up to the top going, is this a guest post by somebody? And then I went and looked at his Twitter profile again. I'm like, did Vitalik get hacked? Because I could see Vitalik like trying to make the case that, hey, we need Bitcoin maximalists in this world. But it's like all this shit in here making fun of him and meeting with the evil world leaders that all the Bitcoiners make fun of him for and bust his chops about. And I'm reading this whole fucking thing, and I'm like, there's like some serious sounding stuff in it, his normal typical essays. I'm just like, I don't fucking get it. I don't get it. And then we get to the stuff about covenants, and we get to this stuff, but he brings up some actual, potential problems that can happen with Ethereum and other chains, et cetera, and blah, blah, blah. And then he throws in this shit about seed oils being a Bitcoiner crusade. I'm like,
Pushed it a little too far on that one.
okay. Fucking April Fools. Now I remember what day it is. So it was a good one. It was actually pretty good. It was weak for him and didn't make sense in places. And I was like, what the fuck? This is not, Vitalik is not normally this piss poor on backing up his points. I don't understand what the fuck's going on. And then I get all the way through it, and I'm like, okay, fucking April Fools. So I mean, I was all ready to reply to him. I was going to write a response. And then I was like, oh, God. Yeah, okay, he's joking. Whatever.
You should write a rant response in line with his layer of double entendre and sarcasm and all
that. Would be hilarious, but I have zero fucking time for that. So, yeah, but anyway.
Like Inception level, man. You go like 6 layers down.
Yeah. It was good. I have to admit, it was pretty good. But I was cynical all the way through. But I'm thinking, and then you think, well, what the fuck why would Vitalik bother with April Fools, right? But evidently he did. Anyway, it's funny. It's good.
Somebody did.
His
cousin Craig Wright,
the original inventor,
exactly,
of the fraud.
The original Napster.
Exactly. So I got this. I love the guys at DeFi Safety, and sometimes they go off on people who they are worried about. But this one was a little bit like, I was like, holy shit. So BuySwap is evidently $500 million. 500 million TVL.
Okay.
I don't know if it's volume or TVL. Anyway, $500 million somehow involved. And DeFi Safety gave him an 11 score out of 100. And I'm like, whoa, what the fuck? So like, this is a pretty significant exchange on the Binance blockchain. And here's the problem. Like, I mean, a lot of what DeFi Safety reviews about these protocols is transparency, documentation, et cetera, et cetera. And I'm a little flabbergasted by this shit, and I wouldn't put my money near this protocol for, anything.
Hold on, put up our show wallet address.
So the first thing is they do not display anywhere in their documentation on their website or anything their smart contract addresses. So a user has to go through BSC scan in order to find the smart contracts addresses, in which they make the point 95% of users don't even know how to do that, right? But the fact that you don't publish them is it's just stupid, right? It's even if it's not nefarious, the fact that they won't even publish them to me says, arrogance, idiots, whatever it is, I don't want to do business with you. That's number one. And then turns out that their CertiK initial audit had numerous medium level issues in it, and BISWAP acknowledged them and never bothered to fix them. And 2 of those related to the centralization of privileges around their MasterChef contract, which MasterChef controls the funds in the contract and also, I believe, controls what gets deployed to the exchange, right, to the DEX. They don't document any of their admin privileges. And they seem to only, what does it say? BISWAP also seems to be the only party capable of proposing changes to the protocol, further demonstrating a certain centralization of power. So, bottom line is I had never dealt with or looked at BISWAP before, but this is the kind of shit that it's like, what we need a way for people to see like DeFi safety grades and other grades and audit reports when they hit a site, right? We need a plugin that says, okay, here's the score of this site and here's why it's a shit site when you're browsing it. So I'm going to tell the guys, I know the guys at DeFi Safety because they were one of the first interviews I did. Father and son team, good guys. I'm gonna reach out to them and tell them to create a browser extension so that, like, as a user hits a DeFi site, if it's got, you can set parameters. So if it's lower than a 70 score, it's going to pop up and tell you, or it just pops up on every DeFi site and tells you if they've scored it before. So anyway, just kind of like astounding. But also we have a lot of naive retail traders on Binance Smart Chain, or what's it called now? Is it called Binance Chain now? I think it's called Binance Chain now. That aren't going to check for any of this, right? They just fucking ape into shit. So,
Coinbase, yeah, it's like Coinbase, isn't it? Yeah, let's send them money.
What?
No, I said they just ape in like it's like Coinbase. So like, that's just like another Coinbase. Just
exactly.
Money.
Exactly. Yeah. Found this site, and this is really cool. So I had been looking at Compass Mining the other day. You and I were talking about it on the show, where we were talking about maybe doing something where you're Alchemix lending, staking, buying, taking what you earn, putting it back in, swapping it from Bitcoin to Ethereum, and then staking. This is one that's launching this summer that actually is using all renewable green energy for the mining rigs. So I think this one has a shit ton of potential.
Full nuclear?
I don't believe they have a pocket nuclear plant. I think that they are, they don't, let me see. I didn't actually check and see what they're using. Let's see.
I mean, I would think, well, okay, so basically just heating up.
It just says their facilities are powered by renewable energy.
There were some cool ones like that out in Colorado I saw a few years ago. They're doing in the mines down there with renewable. Yeah. It's really interesting stuff.
That guy, Pomp's friend, owns a mining company that recycles old tires and uses the energy from that to mine Bitcoin. So that's interesting. Anyway, I'm going to keep an eye on this one. I'm going to get on their wait list because I love the idea, and it's pretty cool that somebody's doing renewable only. I have to take a deeper dive into it, but still interesting.
Yeah. Also, think about, are any of these doing the carbon, furthering it with carbon offsets through like the Klima Infinity?
Right, and they should. Yeah. They absolutely should. My buddies. Speaking of staking ETH, my buddies at Alchemix are now allowing you to use ST or wrapped ST ETH and Rocket Pools ETH, our ETH. They're the coins you get when you stake with them, are now collateral for you to borrow on Alchemix. So you can put $50,000 worth of ETH into Lido or Rocket Pool for staking. You're earning your 4.x%, whatever it is. And then you can take that coupon that you have for that wrapped that Rocket ETH or the ST ETH from Lido and put it into Alchemix and borrow against it. So if you had 50 grand, you put in there, you take that 50 grand representation of it, you put it into Alchemix, and you can borrow against that 50 grand, and then that 50 grand gets paid back. So the beauty of it is, not only are you getting an interest-free loan with no liquidation factor or anything else, you're also earning still on the ETH that you are actually using as collateral. You're still earning 4.3, 4.4, 4.8% from the Ethereum network staking, and you're helping secure the Ethereum network. So that's a really cool model to me.
That is very cool.
Yeah. And, disclaimer, I own a good amount of Alchemix, and but I love them. And I love Scoopy Trouples, the founder of that project. You can check out my interview with him on Mission DeFi. It's one of the featured interviews at missiondefi.com. Great guy, great protocol, great team, and awesome community. So that actually, Alchemix is where I met the guys from Yunt Capital, who I like a lot as well. So good attitude, good approach. Anyway, these are the kind of people building in DeFi that we want representing us to the rest of the world. So this is a really good move. And then further to that, so week before last, you and I were talking about the fact that, or maybe it was earlier this week, God knows when it was. Anyway, we were talking about
Friday, man.
Yeah, I know. We were talking about the, there was a post about the fact that Lido controls over 50% of the staked Ethereum, and that's actually not the case. The exchanges themselves control the majority of the staked Ethereum, decentralized exchanges, the Binances of the world. Well, I shouldn't say that. Okay, here's the breakdown. 48.1% of the staked Ethereum securing the network is unknown. If it's an entity, individuals, whatever. Exchanges have 29.8% of that, and others have 13.0%. So the different staking rates are listed here. And then Lido has 9.6%. So that article had it wrong. Now, what the article said, though, was that it was going to potentially have control of the network. So maybe it didn't have it wrong. Maybe it was just predicting where it would end up. And that's why the argument they were making is that we need to look at Rocket Pool. And the other argument that it was making is that Rocket Pool is decentralized, Lido is centrally controlled. So Rocket Pool waited to launch because they wanted to develop something that was completely decentralized. They wanted to develop something that allowed you to control your tokens, which you were staking, but still allow people to stake that didn't have 32 ETH or didn't want to build up and manage the technical infrastructure that's required to do that. That's what both Lido and Rocket Pool offer you that opportunity. You can go earn on your Ethereum, staking and securing the network, and you don't have to understand all the technical issues, and you don't have to have 32 ETH to get started, which, both of those are providing a great service. Nothing wrong with that. The point is that Lido started centralized, a few people in control of the wallets, and they were gaining a lot more market share, and so people were concerned that they were going to have too much power over the network. Rocket Pool was an alternative, and that article was encouraging people to look at Rocket Pool. Well, this post from Lido is that they are also going decentralized and trustless. So, and they make the argument that they wanted to launch sooner than later to gain market share. And they make the argument that the reason they did it was they wanted to prevent exchanges having all of the securing of the network. And I'm sure that was part of the thought process. But also at the end of the day, they are an entity or a business or a project, and they also wanted to get as much market share as they could to make more money. And that's absolutely cool. We're all good with that. So they are now going to be moving over the coming months into a decentralized model like Rocket Pools. So I don't know if kind of the criticism or the things that were coming at them were a problem. They also claim that there were some technical reasons they couldn't do it right away. So anyway, end of the story is, or end of the day, the story is that Lido is also going decentralized like Rocket Pool. I am probably going to do some staking here in the next week and play around a bit with Alchemix, and I will probably use Rocket Pool out of the gate. but I may spread it out between Rocket Pool and Lido. The other thing to remember is those stake tokens that we were talking about earlier that you get, that you could put into Alchemix. There are also all kinds of yield farming and liquidity pool opportunities with those tokens. The other thing is you don't have to stake Ethereum to get STETH or to get RETH. You can do that, just buy it on an exchange. So if you want a piece of the action and you want to gain that value that gains from staking Ethereum without like buying Ethereum or staking your own Ethereum, you can play in this game just by buying STETH and buying Rocket ETH. So anyway, good news. I think this is great that they're doing it. I think it's smart that they're moving into a trustless system. They are going decentralized. And look, there's a lot of big brain people behind Lido, so I'm confident they'll do a good job with it. But again, not financial advice. Make your own financial decisions and do your own research. But I do think this is a good place to put money. For me personally, I like the idea of staking ETH and earning on that ETH, because I think ETH is going to have a lot of value increase over the next coming several months and years, because I think that when the merge happens and then as the other steps to the version 2 upgrade happen, the value is going to increase. I think it's going to become completely deflationary. And when it does become completely deflationary, obviously shrinking supply means higher demand. And the more people staking to secure the network, the less Ethereum that's available, which means there are going to be even more opportunities for Ethereum to grow in value. So from my perspective, staking the Ethereum, kind of having it locked up there, gaining more Ethereum for your staking, while I think Ethereum over time will increase in value, is a smart move. So that's kind of my own personal argument for my own choices, my own opinions. What do you think, Joe?
I mean, I think Ethereum is a core thing of anybody's holding. I mean, I just unfortunately swing traded it sometimes. Yeah. How can you resist? But so it all depends on what day you get me as to what I think. But I think anything where you're holding Ethereum long and you're earning yield on it is good.
Yeah.
I think you're talking single staking, or you're talking liquidity pools. You just adjust with stable coins or whatever the other pair is. But yeah, I mean, look, do we think that Ethereum's going to be at 3,300 in 2 years? I mean, I don't.
I do not.
I think it's significantly higher. I don't know where it is. I don't know. Is it 8,000 or 12 or 9 or 30? I don't know.
I definitely think 10 is doable. Like I definitely see 10 as completely doable. I definitely think it will get to 10 eventually. When? I don't know. But that's my own personal opinion, right?
Do you think it gets there on its own, or do you think it piggybacks on BTC?
My hope is it decouples from BTC in terms of volatility, and that it gets there because it becomes massively deflationary, because the network becomes stronger, because the fees become smaller. I think all of those things are going to lead to that. I also think that the number of layer 2s popping up are going to make kind of the core functionality of the chain stronger. It's going to make it more valuable. So for me, I think there's a lot of upside to come. A lot.
I think so. I mean, I'm just thinking of that versus, I always kind of look, when I look in the rearview mirror, I'm always looking at Litecoin a lot. And I'm thinking about what I was thinking in 2018 in general, just about we talk about this a lot, Cardano, Stellar, Tron, Litecoin, we don't talk about as much. But I remember I was always like, why not Litecoin? And then I was like, why Litecoin? And, there's always this discussion with Ethereum. I don't have that debate.
Right.
Because we know why Ethereum.
Exactly.
It's the foundational platform, transactional ecosystem for basically all of it.
Yeah.
So to me, I believe that. Now, what that number is, where it ends up, I don't know. In BTC, I don't know either. But, I don't really remember when BTC was going around between let's say 2018 timeframe. I don't really remember a lot of talk of Ethereum going to 100 grand or something in a way that didn't sound outlandish.
Yeah.
And now we're sitting at what are we at, 47 or something like that, 46?
30, 35, 34 today.
No, I'm sorry. I was thinking about BTC.
Oh,
Yeah.
BTC is at yeah,
So,
45.
but 100 sounds like a long way off to me right now
Right.
for BTC, but 10 doesn't feel like a long way off for ETH.
Yep.
I don't know why that is, but to me, I think if you're going to own anything, if I was going to own one, I would probably own Ethereum.
Right. Look, and it's there's usefulness for Ethereum, right?
Yeah.
All of BTC's value is dependent on um, people buying more, people not using it, you know, slowly increasing uh, uh, um, emissions, not increasing emissions, decreasing emissions. The halvings that help boost it because it's going to reduce the supply that's getting emitted. I mean, all those things help Bitcoin, but at the end of the day, unless Stacks or Sovereign or DeFi, whatever that one's called, unless one of those secondary layers for Bitcoin that provide DeFi functionality really blows up and takes off, um, Bitcoin just kind of lays there, and it's got its purpose. I love Bitcoin. I love the fact that it's a great place to store value. I think its value will keep increasing, but I think at some point the market is going to realize there are two uses here: storage, and
Use.
gold and
Utility.
actual functional
Yeah.
use, right? Things something that can be built upon, and there's nothing wrong with either component of it. I absolutely love both. I love both of them, and I love what they do. So anyway, I feel pretty good that yes, I do think that Ethereum 10,000 is doable and probably won't stop there.
Yeah, I think the challenge is, for me, it's to find the ones that are not $3,400 a piece right now.
Yeah, well,
The ones,
that's
and
Phantom,
yeah, I mean,
right?
anything
I
like
mean,
that. I mean, yeah,
0.41 ratio TVL ratio is like, what the fuck.
I know.
So
I would think about the layer ones and layer twos. Not so much layer twos, more layer ones. Is it Ethereum out of the gas price issue? I guess.
yeah,
And then all the merger, deflation, all of this coming together. I don't hear a lot of people talking about the threat that is towards Solana and Phantom and Avalanche, in Binance Smart Chain or Binance
right.
Chain, going forward, because I think it's going to come back to, I mean, if I'm like already in there versus setting up another wallet and it's an $18 trade or a $9 trade, I'm going to do it.
Yeah,
But if it's like 60 or $70, then I'm going to be like, wait, how do I set this up again?
yeah,
And
exactly.
trying to figure it out. So if the only point I'm saying is I don't know what that number is, but there is a number where people don't care about gas. And
Right.
when it's obfuscated or hidden into things like Olympus models and stuff like that, which, if you think about it, really just came out of that gas thing, the
Yep.
auto compounding, where it's hidden in there. The gas price is hidden in the compounding. Um, now how does the market correct back? I guess is what I'm getting at.
Right.
And that would tell me that Ethereum price goes up.
I
You
totally
know,
agree. So
so
here's DeFi Edge. This guy's great. If you don't follow him on Twitter, you should, and put
okay.
on notifications for him because I rarely see him post content that is invaluable to me. He did a document. He has a newsletter, but he did a post on his thoughts on various layer ones. I agree probably with about 90% of what he says in this, but let's run through this real quick because it's relevant to what we were just talking about, right? So here's his thoughts on Ethereum. Um, all eyes are on Ethereum this year and what happened with the merge coming this quarter. Triple halvening. Yearly ETH emissions will go from 4.3% down to 0.43%. And the burning will cause ETH to become deflationary. Increased demand, decreased supply. And then he says, what do you think is going to happen? Layer 2 solutions are heating up. We were just talking about that. Like there are so many layer 2 things happening and some with unique propositions that are not kind of generic like Polygon, right? So ZK rollups and Starkware are coming. And then he said more and more institutional interest. Hedge funds are risk averse, so they'll stick to mainly Bitcoin and Ethereum. He said the biggest threats to Ethereum are the alt L1s catching up and possible issues and deploy delays with the merge. And I agree, like it could take a hit if there's a problem with the merge, something goes wrong, whatever. So, but he does say every portfolio needs exposure to ETH. I read a piece yesterday about Terra and Luna and UST. Um, a series of comments in a Twitter thread saying that there were some real issues with propping up price and the risk of DPEG. But here are DeFi Edge's thoughts. He says DeFi Terra has been a shining star in a quarter where everything got wrecked. When the market turns bearish, demand for UST increases. And he says, of course, that's because on Anchor Protocol with UST, you can earn 19.5%. Right now, I haven't dabbled with UST yet, but I think I'm going to have to. Terra plans to buy and hold $10 billion in Bitcoin. We've talked about that a lot, that's for its reserves to help defend the peg. Alice Finance is an exchange, I believe. Oh, no, Alice Finance is the one that allows people to use it to pay for things. So it has a real world use of UST. Allows you to use UST to pay for stuff in South Korea. Alice is looking to bring that to the US and the rest of the world. The main risk of sustainability is the sustainability of the 19.5% yield reserves. And he said they're addressing this with semi-dynamic rates. The entire ecosystem, though, the entire chain, he's right, hinges on whether UST gets adopted. He said he's bullish on a decentralized stablecoin and how they're moving to real world adoption. Even if the protocol Anchor lowers to 15% APY, he's still parking his stablecoins there. So it's good. Avalanche, he said there's significant momentum after the Avalanche Summit. DeFi Kingdoms has launched its own subnet. It's the first major test of subnets. Other games are coming. Basically, he thinks that gaming is going to be huge on Avalanche subnets because it gives games control. We've talked about that in the last week. Liquid staking, this launched a few weeks back, and unlocking more liquidity to the system. Platypus Finance, which I have a little bit in, is also growing rapidly and kind of becoming the convex CVX of Avalanche. And then Trader Joe Tokenomics, largest desk on AVAX, has finished upgrading their tokenomics. He says the main competition for them is other layer ones. And he said we saw significant money leave the ecosystem in January for FTM in anticipation of Solidly. So for Phantom, he says Phantom is the hottest layer one into quarter one, but because of Solidly, but then FTM took a beating. We all know kind of what happened with Solidly and Andre leaving and yada, yada, yada. But he says it's the most undervalued chain by far. Market cap to TVL ratio of 0.42, not 0.41. He says it's still DeFi's favorite place to be a degen. While Kanye will be missed, there are plenty of developers building, nothing to worry about. The main narrative playing out in an FTM war, the wars for governance tokens, such as Spirit and Beats. So that's Beethoven and Spirit Swap are both kind of battling it out for their governance token models. Spirit Swap has one very similar to CVX, etc. And then he brings up Harry Yee launching Felix Exchange, which is basically a branded version of Binance with only Phantom coins on it. You know, fuck Harry Yee and whatever the fuck he's building can't be trusted as far as I'm concerned. So, and then he said FTM just announced a $480 million grant program, and this is for large and small projects. They're using Gitcoin for it. I saw this yesterday. And, you know, all those things always stir interest and get people moving over. So excited to see that they're doing this. I'm going to take a deeper look at that one, the new program, later today. Cosmos. So, you know, after I read this article, I dove a little deeper into Cosmos. So I'm going to talk about that in a little bit. But I understood that Cosmos had this layer that allowed cross-chain transaction capabilities. But what I didn't, and he talks about this in the context of how bridges are getting hacked and Vitalik saying that bridges are dangerous, et cetera, et cetera. But what I didn't know was that Terra Luna, Thorchain, Kronos, and Binance are all built on top of Cosmos as a layer 0. And I had no idea that Binance was built, nor that Thorchain was built on Cosmos. So I was kind of shocked by that. He calls it's the European Union of the different L1s. And I really had no idea that Cosmos was such an important layer underneath there. But what's interesting is I went and looked at Cosmos a little bit more, and I've looked at their website before, but like they have this entire process, Joe, that you could come in here and essentially use this app they have called Stargate and launch your own blockchain, dude. Like,
Mhm.
you know, control all the functions of it, set it up, get it going, build it out. So I really want to take a deeper look in them. I want to look at Atom more deeply. I haven't been looking at the price action on that, but that there's a lot of power when you're the one powering all of these other chains. Now the question becomes whether the value returns back to Atom and back to Cosmos from all these chains being run on it, or is it just essentially this thing that everything is getting run on and there's no value back to people that are invested in Cosmos itself? And I don't know the answer to that question. Harmony One, which I have done zero with. But what I didn't know was that DeFi Kingdoms is 55% of the TVL of Harmony One, and DeFi Kingdoms is moving to a subnet on Avalanche. So I think they're going to take a pretty big hit on that. But he does say that it is the fastest and cheapest chain out there. And he still thinks that there's a lot of GameFi opportunity, and there are games coming out on it. Defira, Mars Colony, Cosmic Universe, and Freyala. Anyway, he sees Harmony One as a good GameFi play. I'll take a look at it, but there's so much to look at these days. I doubt I'm ever going to become much on Harmony. BNB says I don't pay attention to BNB, but you can't fade CZ. Owning the number one exchange in the world is quite the moat. I agree, and that's where all of those retail traders that BSC has came from, right? They all were Binance users, and they hop over to BSC. They can transfer their tokens back and forth between the exchange and BSC. It makes total sense, and I frankly don't think Binance Smart Chain is going anywhere anytime soon. He's bearish on Solana. He said because the TVL has had a tanking, and he thinks it's overvalued compared to other L1s. Matic, he's bearish, and he's bearish because he thinks true L2s like Starkware are coming. This is one of the points I disagree with him. I'm not bearish at all on Matic. I'm bullish on Matic, and I'm a little surprised because he's such a smart guy that in making that comment, he doesn't take into account that Matic has true L2s already within their ecosystem through acquisition and building it. So beyond kind of the sidechain argument for what Matic has now on the proof of stake network, there are actual true L2s in their network being built upon, having partnerships with, including EY. So I absolutely disagree with his assessment on Matic, but everyone has their own point of view. Kronos, which is crypto.com, he says they know how to get eyeballs to their product. TVL has been steadily going up even in a bearish environment. Thorchain, bullish. It's one I still want to go take a bigger look at because I think these cross-chain non-EVM capabilities of Thorchain are important. Being able to swap Bitcoin over to Ethereum and other chains is really cool. Now that I know, though, that Cosmos is behind that, I want to take a deeper look. Polkadot, he says I don't pay much attention to them. My attention's on Cosmos as my layer 0 of choice, and then Cardano 5 LOL emojis. So anyway, good piece. I'll post it in the show notes. Some really good assessments of kind of what's going on with these layer ones. I disagree with a couple of things, but overall, I like what he's doing there. I like most of what he had to say there. So any thoughts?
Yes, right. No, I thought it was good stuff. I mean, Harmony One, there was a lot of talk about Harmony One somewhere back last summer.
Right.
When we were rolling through all those different L1s and L2s. And it definitely talked about Cosmos as a layer 0
right
in the past, but I didn't really. I think, God damn it, I think what got it going was that, once everything started cycling through all the different chains, and it kept coming back to Cosmos a couple of times. I think that's what got it some traction.
Yeah,
and we're hearing about it and hearing about it again, and other ones floating around in there. But again, your guy was talking about that near, and I think GameFi. I think in the end, it's going to have to come down to the application.
Right.
Oops. Can you hear me?
Yeah, I can hear you.
Okay, yeah. It's going to have to come down to the application versus just the the infrastructure. I just don't. That's kind of what I'm seeing. Looking at .com analogs and looking at 2018 analogs, that something has to really be doing something. I mean, it is. It's starting to.
Right.
That's what I'm kind of curious to see, because to me, there's not a big technical differentiation. I mean, obviously, if you can solve the trilemma, yeah, it's like
that's Algorand. Don't forget.
Yeah. That's like lightweight water.
They
man.
just can't solve the acquire users problem.
Yeah.
Chuck had some skepticism on our Ethereum take. He said, I think Ethereum disappears under multiple layers of other services to make it work to the point that you have to question the long-term value of ETH too. It's got so many flaws right now. And look, I think there's some validity to that argument that with layer 2s and other layer 1s, even with layer 2s, potentially Ethereum could become just a storage network, right? It just becomes like Bitcoin and is just storing the transaction data on the blockchain. But because of all the layer 2s that get built on top of it, the Ethereum token itself isn't going to have a lot of value. And that's not, I don't disagree with that argument that potentially could happen, but I think we have a long ways to go before that happens. I think we cross 10,000 before that happens, because I think there are so many things being built on it. The deflationary nature of it's going to make it actually increase in value, which will attract more people to it. And the decrease in the cost of transactions as the upgrade occurs is going to make a huge difference to people actually transacting on it. Currently, well, in recent history, the only people really doing anything in the Ethereum protocols are big, giant institutional players. Well, I think they will still do things directly on the Ethereum protocol because they'll be worried about layer 2s. And at the same time, they will have a lot more smaller retail traders willing to trade and do investments on Ethereum because the fees will have dropped. So we'll see. Anyway, he also said BTC is just digital precious metal, and I think that's a great way to say it. So
yeah.
Okay, so you remember the other day we were talking about waves and that massive increase, in price? This is why I love Twitter, because there are so many big fucking brain people much smarter than me to do this kind of research, and I'm actually pretty excited about it. That people do this. So I read this tweet. Waves is the biggest Ponzi in crypto. It has recklessly engineered price spikes by borrowing USDC at 35% to buy its own token. Continuous Waves market cap growth is needed to keep the system stable. Waves will eventually crash and USDN will break with it. You're on notice. Basically, what he's saying is the founders of Waves have been propping up the price and the stability of their stablecoin and the price of Waves by taking Waves, borrowing it against the only lending protocol called Vyre that exists on the Waves chain, borrowing against it for USDC, taking the USDC. Let me make sure I get this trip right, because I don't want to fuck up the round trip on this, right? Because he breaks it down here. Okay. Where is it? So here's the flow. USDC, he deposits they take USDC in, USDN being emitted on the chain, and they deposit it on Vyres. They borrow USDC on Vyres because they can't do anything with USDN anywhere else but Waves, and nobody's using it for anything, and there's no liquidity anywhere else, right? That's the basic argument. They transfer the USDC to Binance, and then they use the USDC to buy Waves to bump the price. Right? Then they convert the Waves to USDN and start the whole process over again. And the bottom line of what he's saying is that when this stops working, this entire thing is going to collapse, right?
Yeah,
because yeah, so they're basically propping this thing up. Now, I am sure that they're propping it up because they're launching EVM capability. They're launching all these other functionalities, the things we talked about in the show when we talked about Waves. And I still am mad at myself for not buying some Waves and taking that big ass 111% run up it did since we talked about it. I looked it up. We talked about it on March 10th. From March 10th to the other day when it had the end of its big spike, that was 111% from that day when I should have bought it when I was talking about it. So whatever that was, 2.5 weeks. But obviously, for me, this would not be a long-term hold based on the information here. He got asked later on in the replies for him to post the proof on Etherscan, et cetera, and he did post that. But bottom line is, there's no organic activity. There's not a lot happening. When I was remarking at all that TVL, that's all been generated by the founders of the protocol. Generating the TVL.
I think what Brad's saying is, if you've got anything in this deal, you might want to think about.
Yeah, you do want to think about your timing. That's for goddamn sure.
Yeah, you might want to pick up the pace there a little bit.
And look, I think, it's interesting because I did read through a lot when we were talking about it that day in terms of what they're building and what's coming for it. And so for me, it's like, wow, there's a lot of potential there, right? It's really fast, has a lot of fast transaction capability. It's going to have EVM compatibility. There's a lot of things that could be good about it. But this kind of artificial, basically they've got it on life support and they're just pumping up injecting it with adrenaline every day, is a little scary.
They're essentially printing up their own USDC.
Correct.
Without collateral, and then trading that on another exchange. I mean, those are supposed to be closed loop exchanges, so you can't do that.
No, but they're not. They're doing it on their own exchange, on their own lending protocol, and then moving it over, right? So yeah, it feels very sleazy, Joe.
It does. It has as we usually say about 5 minutes after this, damn, I should have caught that one.
That is everything I have for today, Joe. Did you have anything you want to add? I got a 1 o'clock call anyway, so I got a bolt.
No, I'm good. I just stuff I was gonna do. I just tossed into your conversations as we were going, so it just makes it more lively. And I just haven't seen anything really super exciting yet that I want to dig into. I am tempted to talk more about Terra going forward, since there's a lot of talk about that.
Yep.
But where are the yields? I'll start looking. This is a weekend, right? It's Friday. Yeah. Okay.
Yep.
So maybe Monday I'll have some, just do a quick update through all the yield farms that we've done historically and just see what's going on. Yeah, we should go back to some of that, because they're still delivering. Just the reward token hasn't held price up. So
right.
So it's a question of, do you have more or less? I think you're still ahead, but it requires the next comeback. So things like that, we just need to start thinking about. And thinking about what the next wave is going to be, because I didn't really see the 2021 stuff going as big as it did. It kind of came out of me at nowhere. So what I'm getting at is, I think that there's plenty more of those to come, if everybody plays it smart.
Absolutely, dude.
All right, Ben.
So, all right, buddy, have a good one.
Have a good weekend too. All right.
See ya. You too. Thanks. Bye, everybody, for listening and watching. We love you. We appreciate you. Please rate, review, subscribe on Apple Podcasts, your favorite podcasting app, and subscribe, like, and give us a thumbs up on YouTube. Thanks for listening. Thanks for watching. And at any time you want to give us some ideas or thoughts or feedback, it's B05 Crypto on Twitter and Telegram. Feel free to reach out. My DMs are open. Talk to you later.